Good morning, good afternoon, and good evening to everyone around the world. And thank you all so much for taking the time to join us for today's webinar, Think Outside the ATM Box. My name is Karen Redfern, and I'd like to welcome you all to today's presentation and cover a few housekeeping items. This session is being recorded, and the recording will be made available for replay to those who are not able to attend this session live. If you object to participating in a recorded session, you may disconnect from the webinar now or at any time. The recorded link and presentation deck will be distributed tomorrow via email, and you may listen to the replay at your convenience. All phone lines will be muted during the webinar, but questions may be submitted at any time through the Q&A feature at the bottom of your screen. Please use the Q&A feature to send your questions to all panelists. At the conclusion of the session, we will have a final poll question for you. If you could please take the time to answer the poll question, your participation is appreciated. I would now like to introduce our moderator, Scott Anderson, Diebold Nixdorf's Senior Director of Evangelism. Scott joined the company in 2000 as Director of Strategic Accounts for Banking Software. In the 2 decades since, he has traveled the globe engaging with financial institutions on their omni-channel strategies and software implementation projects. Prior to joining Diebold Nixdorf, Scott spent 12 years across various branch, call center, product, and retail distribution strategy roles at a top chartered bank in Canada. He is a software expert and DN brand evangelist dedicated to customer-focused software solutions. Welcome, Scott, and I now turn the presentation over to you.
Thanks, Karen. Appreciate that intro. So let's get things started. How important is self-service and cash access to consumers? And what about the financial institution? What is really clear is the automation of cash, whether that be operational, access to cash, the distribution of it, or the potential diminishment of cash in the larger payments landscape. All of these have impacts to the value of the self-service channel. Today we have a paradigm about the ATM, but we think that paradigm is ready for a change. And the webinar we are hosting today is about that change. I'm pleased to be joined by 2 colleagues who have a wealth of knowledge on this subject. And first I'd like to introduce Thomas Schulze. He's an industry specialist who has amassed broad international experience spanning Europe, Asia Pacific, and the Americas with several multi-year assignments. Thomas joined Diebold Nixdorf in 2001 and has always held close contact to customers, which helped him to develop a comprehensive understanding of the market and customer needs. He now leads the regional sales team for the Americas, building the interface between our sales organization and product groups. Thomas and I are also joined by Jerome Amara. Jerome, similar to Thomas, leads the regional systems team for Eurasia, also building the interface between our sales organization and product groups. Previously, Jerome has held various senior positions in sales, business development, and portfolio management with global exposure. Prior to his return to Europe in 2016, he served as Vice President Sales, Asia Pacific, and Vice President Sales and Marketing and Managing Director for Southeast Asia. Welcome, gentlemen. So let's get started with the agenda. For today's webinar, we'll focus on setting the stage and outline our point of view on the banking landscape and map that to how the role of self-service fits for the consumer, but also for the banker. After that preface, my colleagues will outline how technology is the basis for personalized and digitally enabled experiences, and how Diebold Nixdorf is enabling the self-service channel of the future. We'll have some time at the end, as Karen had mentioned, for questions, and welcome you to submit them throughout the course of our discussion. So let's kick it off. Has the world gotten more complex or simpler? I think what's really certain is that it's definitely changed. If you think about it, the pace of change has accelerated dramatically. It took 50 years to achieve 50 million telephone users, but it only took 19 days for Pokemon Go to have 50 million downloads around the globe. When we look at this in the context of banking, we can also determine that that's changed over the decades, and certainly the pressure to accelerate that change has increased. There are a lot of forces directly impacting the retail banking industry. And overall, from our perspective, we cluster these into 4 main themes that the banking industry is faced with. Let's start with a look at rising competition. I think we can all agree consumers no longer have complete loyalty to a single bank logo. The Competitive threats to the business of traditional retail banks comes from digital giants such as Google, Apple, Amazon, Alibaba. And besides digital giants like Amazon, innovative new entrants like digital banks, fintechs, or even retailers are often showing us better ways of delivering desired consumer journeys. When we look at shifting cost basis, the force to optimize cost is certainly not a new topic for FIs. Security and being compliant to new regulatory requirements have huge costs involved. Besides that, retail banks have a business model based on physical reach, which can be extremely costly if not managed correctly. Although people speak about cash disappearing, the handling of cash remains costly as long as it's in the system. From a consumer evolution perspective, I don't think anybody can argue that the consumer has evolved. Their habits and norms are definitely changing. They are more tech savvy and demanding. They are constantly living in a stream of commerce messages across all channels, and losing their attention means losing their relationship. The concept of a single bank for life has gone, and the consumers are no longer tied to a logo. They don't think in channels or touch points. They just care about their individual journey to get things done. And they decide when and where and how they want to engage. And finally, let's look at unbundling. Sorry, just back up on the slide here. New banking regulations such as PSD2 in Europe, open banking in the UK, and NPP in Australia are definitely changing the landscape. By opening up and increasing competition in the banking industry, but also by improving customer choice and experience. So what does this mean for the individual FI? This opening up of the FI's domain will lead to the formation of new partnerships and new players from both inside and outside the traditional banking environment. And FIs must consider the role they want to play in this new API and app-based world, and how to take advantage of it, and absolutely how to manage it. If we look at cash use and growth, you can pick your country, you can pick your own perspective, but the stats are showing us that cash in circulation globally is definitely increasing, despite the insurgence of digital payments. So what does this really mean? Well, from our perspective, we believe that the use of cash is actually changing, perhaps not necessarily as a payment vehicle, but perhaps as a method of stored, secured value. And I think from a financial institution perspective, there's a perceived custodial role that is to be played. Secure and trusted storage of and timely access to cash is really the role of the bank. And until the last note is in circulation, this perceived obligation has an impact on the operations of the banking provider. Financial inclusion. How do we financially connect to those who aren't unbanked or underbanked? The trend is very clear. Digital usage is up in developing markets. Consumers are more increasingly mobile technology enabled. And what the research is showing us indicates mobile-inclined consumers are actually more likely to engage via self-service versus in-branch. So the value of self-service to tap a growing market and provide financial inclusion is becoming paramount. When we follow this train of thought, digitally inclined consumers are also looking for more capabilities when and where they need it, and this further reinforces the need to automate more. Finally, when we couple this with the drive to reduce branch costs, finding new ways to grow book of business and retain existing relationships, redefining how branches are used as an engagement model for transaction processing versus true financial advisory services also needs to change. When we bring all of these trends together and pressures, we are really looking at how this banking model is being under siege. At this point, I'd like to really invite my colleagues to share their specific regionalized points of view on what's happening. Jerome, let's start with you.
Hey, thank you, Scott, and hello, everyone. I hope you can hear me loud and clear. As Scott indicated, the banking landscape is changing very fast, so does demand for self-service solutions. I mean, typically, the massive transformation pertains to the digital transformation of the banks. The banks are moving very fast to a digital-centric delivery. The transition to a lighter cash economy is obviously putting pressure on the overall cash supply chain, and customer demand for bank for one is shifting the way we need to consider banking. This transition is already at play in many markets we are addressing, and I would like to walk you through a few examples. One very interesting is the Nordics. I mean, the Nordics is probably a very good example of a fast transition to a lighter cash economy. cash transactions are increasingly moving outside the branch premise, whether it be in off-site location or in dedicated centers outside the branch itself. I mean, solutions there need to cater to cash recycling in order to reduce dependencies on fixed cost-based cash supply chain. Small and medium business need to receive cash services through automated, prompting to solutions that can cater to large volume cash and coin, deposit and dispense. And as the banks reduce their own ATM estate, ATM pooling to create efficiencies is become a prominent way to deliver self-service banking. In the Middle East, that's probably one of the most exciting markets I'm pleased to engage with. We see a very customer-centric market where the demand for advanced and a broad set of transactions on a 24/7 is very high. New transaction sets include account opening, KYC, card dispensing, checkbook issuance, and a lot of card and non-card-based transactions. I mean, the complex transactions that we are delivering there also require the ability to assist customers through the self-service journey, whether it be through video assistance or technology-enabled roving tellers. In Germany, Germany remains one of these markets, similarly as Iberia and Italy, where we see the cash remaining core part of the culture and the customer demand. In the meantime, we see a reduction in the branch estate that consolidates increasingly. ATMs there are deployed as a branch in the community where recycling is becoming widespread in order to reduce the cost of operating the networks. The need for higher volume and more efficient cash recycling is a prominent need for the new generation of self-service. Turkey, another beautiful example of a fast-moving market, we are facing a young population with a very big appetite for technology. ATMs remain the main, if not the only touch point for these digital natives that are predominantly using mobile apps. In there, ATMs need to be able to deliver large volume of cash, deposit, and recycling, and modern UX becomes the norm in order to smoothly integrate into the digital strategy. The support for large number of transactions is a norm in Turkey, with most of the ATM delivering 40 to 50 different transactions itself. In Singapore is often quoted as a blueprint for technology advancement. We see there, for those that are blessed to travel there, a very large offering of digital payment. In spite of that, cash remains ingrained in the society, and Singapore is the host of probably the most transacting ATM in the world. There, the need for cash recycling with very high capacity is critical to contain the cost of cash, and UX are evolving to cater to the customer-centric design banks are deploying in their journeys. Thomas, back to you for some Americas example.
Thank you, Jerome. I hope also you can hear me loud and clear. I'd like to give you 4 examples from the Americas region. Firstly, in the US, banks are rethinking their branch footprint. Real estate, especially in metro areas, is very expensive. Demographics are changing. So what we are seeing is we see cash deposits increasing. We see check deposits going down across the board. So what we believe in the US, the time is right now to make the next step to come from a teller cash recycling environment also to a self-service cash recycling environment. The second example would be Canada. Similar to the US here, cash recycling at self-service has not really kicked in yet. In Canada today, there is a lot of focus on operations improvement, hence managed services and outsourcing of ATM fleet management are very relevant. And same as in the US, banks are expanding the transaction set of their ATMs. The third example would be Mexico, and cash is king in Mexico, and those financial institutions who already have established cash recycling are seeing tremendous reduction in CRT-related cost. Others are using cash recycling technology to facilitate cash out and cash deposit transactions, but have not activated the recycling technology yet. But here, the advantage is that these ATMs are all ready to switch cash recycling on whenever the environment becomes ready or when it is desired. What we also see in Mexico is increasing requirements around security. So additional security requirements, additional identification measurements are being integrated, and these range from biometric fingerprint readers at the ATM over usage of highest grade safes that withstand gas and explosive attacks, up to logical hardening ATM environments and interfaces. Also, Brazil is a very cash-driven market, and that recently started to introduce self-recycling or self-service recycling technology. And in Brazil, when you walk into a bank branch, it is not uncommon to see 6, 8, or even more ATMs installed in the lobbies. Similar, like in Mexico, security requirements are very tight. Biometrics like fingerprint or palm vein scanners and highest grade safes. And what is very interesting in Brazil is that several banks are offering a set of no less than 40 different transactions at their recycling ATMs. And they are bringing a very comprehensive service set to their clients. And I'll just give you 3 examples. One is you can contract a life insurance on your ATM, or you can contract a loan on your ATM, or you can even pay your yearly car taxes on the ATM. So it is just a quick look at what's happening in the Americas, and I would like to hand over back to Scott now.
Thanks so much, gentlemen. With all of these ideas from the different markets in mind, from a Diebold Nixdorf perspective, self-service strategy really needs to be anchored around 3 pillars: cash automation, journey thinking, and of course reducing that PTO. We believe self-service should be the primary vehicle to automate cash processes. And as Jerome and Thomas have talked about, these are really critical to ensuring a real streamlined operation in the background. Financial institutions are constantly pressured to optimize the cost of the physical footprint, and self-service is one of those assets that the banks have in their arsenal to achieve a right-sizing approach, even as the branch model evolves, making the ATM an integral tool for in the branch, or even to act as a proxy as the branch, in locations where a full-blown branch setup is no longer viable. Second, the importance of journey thinking is critical. In terms of bringing someone from point A to point B while providing the best and most seamless experience, we need to think in journey context. This includes not only the consumers, but small and medium business owners and merchants, as well as branch staff. And finally, reducing costs and driving efficiencies across the self-service channel is integral to stay profitable. As noted, as long as there's cash in the system, it will remain costly if it's not managed correctly. Cash management holds hidden costs that we all know about and tricky analytics to ensure just the right amount of cash is available, not too much or not too little. This is where cash recycling capabilities at the self-service channel really can kick in, and we can help to greatly reduce these costs. When you think of cash as a utility, or whether you think of the self-service experience as a critical and strategic touchpoint, the ATM absolutely needs to be part of your overall digital strategy and bank. No other touchpoint can connect and deliver the same digital channel capabilities as Thomas mentioned, up to 40 transactions at a device, while at the same time it's building that bridge between the physical world and cash access. And it's about turning the legacy ATM silo into a constantly evolving centerpiece of engagement, where the journeys of consumers, business owners, and even staff are included in the mix. While most have managed this alone and in isolation in the past, the future of banking and the services and delivery of self-service around it must be more agile, must be interconnected, and also must be seamlessly incorporated into consumers' daily lives, which can really and could and should include other partners and integration points in the ecosystem to deliver this successfully. You don't have to go this alone. At this point in time, I'd like to re-welcome Thomas back to the dialogue.
Yeah, thank you, Scott. So when we look today at banking strategies, most strategy reports are evolving around enhancing the consumer experience or the customer experience, gaining efficiencies, reducing costs. mitigating risks, and I'm sure you have heard of all of these before, or at least this doesn't come as a surprise to you. But what we would like to do now in our session is to put a bit more color around it and to show you how technology and digitalization are building the brackets around these topics. And a few minutes ago, Scott talked about the customer journey. So what does it mean to develop a seamless journey for our customers? First of all, I think it's important to define the customer journey itself and its steps, which includes defining the target group and also the services you want to offer. In the second step, then, one needs to define the relevant touch points and orchestrate those touch points, the existing and the new ones, what basically means to bring them all onto a common platform. That is one of the cornerstones to make the journey in the end as seamless as possible. In the third step, think about interoperability of your touch points and services. This brings the advantage of collection, correlation, and intelligent use of data, and then considering also that a financial institution can integrate business partners and fintechs. The intelligent use of data becomes even more relevant and will not only benefit your customer relationships or your customer satisfaction, it will also affect your customer loyalty, which we heard from Scott earlier is not so easy to keep intact nowadays. And the successful implementation of seamless and frictionless customer journeys does not only increase this customer satisfaction, it will also help you to enhance your speed and reduce your cost and help refocus your own staff to drive the business and not to manage your IT. So banking services will be more agile, will be more interconnected and seamlessly incorporated into consumers' daily lives. And then it is less, when we look at the ATM, it is less about the ATM itself. It is more about which role the ATM plays and in the end of it, what you can do with it. So I would like to talk a little bit now about 4 trends that we see that make self-service, the self-service channel, relevant in the 21st century. First, financial institutions globally are constantly pressured to optimize the cost of their physical footprints, branch size and branch location, placement of ATMs, where to open, where to close a location, all impact the business model. And the industry is challenged also with a shifting cost base, as we heard from Scott before. And here, the role of self-service is actually one very important asset financial institutions have in their arsenal to achieve a right-sizing approach as their branch model evolves. So some FIs are moving to 100% automation in some branches to address demographic needs. But we believe the modern ATM with the possible transaction sets goes beyond this function and can act in the branch and as the branch. And thus this physical asset of the ATM becomes an extension of your distribution strategy. So strategically, the ATM is a key tool in enhancing your brand's perception, in providing access to financial services, and extending the digital capabilities of a financial institution by bridging the physical and the digital worlds. And same as the ATM can represent the branch in a traditional environment, is also true for off-premise locations. And here the ATM can act as a market entry position to introduce your brand and provide flexible access to financial services and cash without building a full branch. Or it can be an extension of your office hours, if you will. And lastly, off-premise ATM deployments can serve as a remaining footprint or a leave-behind strategy for markets and locations where physical branches are no longer viable. Thirdly, the cash recycling ATMs. So cash recycling ATMs are helping banks to optimize their cash management. As long as cash is around and people will use it, banks need to find a way how to offer efficient access to their cash services, and ironically, the cost per cash transaction even increases when the total number of cash transactions decrease. So cash handling therefore remains costly if it is not managed right. And overall, the answer lies in an end-to-end optimization of cash. Now think about the typical ATM in a branch environment. Cash deposits are taken in while cash withdrawals are being dispensed, and a great deal of human intervention, planning, and secure cash handling and transportation are needed to empty deposits and replenish stocks for withdrawal. And now multiply that by your footprint, multiply that by your number of ATMs across multiple sites, and the value of cash management here is staggering. So now think about using cash recycling at a self-service ATM, for example, providing this service to your small and medium business clients, and provide a more convenient, more secure, and at the same time a faster way for them to deposit their cash at the end of their days, and have basically the SMBs fill the ATM in the evening and the consumers empty the ATM on the next day. And here, this would be indeed a great improvement of service for your SMB clients, and at the same time, a tremendous savings potential for your cash management related cost. And last but not least, we believe the ATM is being leveraged in entirely new ways. Just a few examples from the consumer technology, which has accelerated over the past 10 years in a significant way. So smart devices, Internet of Things are topics that everyone knows and is using day in, day out. You can turn your lights on from everywhere in the world. You can turn your AC on when your plane is landed so that the house is nicely cooled down when you get home, and this is very common. And you can manage your water irrigation in the backyard and even run your barbecue smoker on an app. PCs, smart TVs, smartphone manufacturers constantly offering next generation replacements that are smaller, thinner, smarter, and more secure at the same time. And here we see that the ATM is no different. There is a need for clearly a differentiated solution focusing on user experience and the user needs. And this is done by integrating more connectivity options, by utilizing big data, utilizing artificial intelligence, but also by modernizing the design and creating a very modern, sleek, tablet-like user experience. So the ATM is a building block to make the customer journey seamless and frictionless. And as said earlier, it is not so much solely around the ATM itself, it is about what you can do with it. So having said that, self-service today is an embedded and vital touch point in consumers' financial lives. Consumers expect modern screens, modern devices, and top-notch connectivity, which means that the ATM should and can be considered as an integrated part of a financial institution's digital strategy. The modern ATM environment enables that physical touchpoint to be connected and integrated into the overall digital capabilities of a bank, so it is a natural extension of the digital world. Providing all of the same capabilities and functionality, it builds the bridge between the physical and the digital worlds. It builds the bridge between the physical and the digital delivery channels. So in fact, enabling the ATM to fulfill on the digital delivery of capabilities to the consumer has never been more important. And this again brings us back to the customer journey thinking. So customers expect to remove friction in their daily lives, and that includes their banking needs. They want this to be easy. They want this to be easy, and to provide this frictionless journey, delivery channels require that seamless bridge between the digital and the physical worlds. So journeys will often begin on the consumer's mobile device and are fulfilled through other mechanisms such as the ATM. So if we would think this one or two steps further, it could imply that the days of requiring a physical card and a PIN may be numbered. And with this, I would like to give back to Scott.
Thanks so much. Jerome, I think you're up.
So as I was mentioning, ATM environment now needs to connect to application ecosystem in order for the financial institution to offer services that goes beyond the financial institution boundaries. The idea behind is really to be able for the financial institution to drive end-to-end customer journey experience from the commerce to the banking very seamlessly and the other way around. Additionally, technology such as HTML5 will allow customers to put full advantage of modernized UI from the digital world and the internet. The experience on the ATM need not to be consistent with those of the digital channel and help the bank to build once and deploy faster across all the physical touchpoint. Additionally, and also critical, the ATM needs not to get to connected devices landscape. I mean, the DN series components are now intelligent and self-aware. They can inform automatically of service needs and allow a more effective and predictive service model. Similarly, as many of the devices of our daily world, they will now be able to directly request for servicing and allow the technician to be remotely aware of the service needs and to streamline repair action. To enable this new era of self-service, security is at the core of our approach. Physical and digital threats around ATM is increasingly growing by the day. DN series is built from the ground up with an entirely new approach to reduce exposure to these emerging threats with a new set of unmatched security options for our customers. Finally, many financial institutions and deployers want to be able to consume our solution on a as-a-service model. I mean, whether it's to transition some CapEx into an OpEx model or to move to pay-per-use, I mean, ATM as a service is ingrained in our approach with the DN series solution set. A model that is particularly relevant and growing today in the market is ATM pooling and sharing of ATM network that the as-a-service model of DN series fully enable as we move forward. Very important with DN series is we took the deliberate approach to leverage collaborative innovation with our global customer around the world. We involve our client base not only in the demand evaluation, but also fully embed them in our R&D process. This allowed us to ensure our solution in the transforming financial institution ecosystem and to pilot and prove the value points of DN series globally before even its launch. We are grateful for the incredible support we receive from our customer with some of the leading ones that are highlighted in this page. Thanks to DN series and the collaboration with our customer, we are able to deliver more to this industry than any other self-service before. So DN series is meant to connect and to be the most innovative, flexible, and adaptable self-service platform ever. It connects swiftly consumers to their FIs, but is also meant, as Scott alluded before, and is very oriented around catering the need to the small and medium business, where self-service options were limited so far. With higher capacity and new software options, small and medium business will be able to take full advantage of automation in the bank. Very, very prominent, and Thomas highlighted that, we mean for DN series to be fully embedded in the digital experience and to be the main touch point, bridging the world of the digital and physical with many options for transaction staging and automation of transactions that start in the digital and finish on the self-service device. What is very important for us is that to provide the solve that the industry requires and to deliver on the transformation imperative within the market, we cannot, and it's not suffice to deliver best-in-class touchpoint. What we are delivering with DN series is an ecosystem of solutions. We enable the new customer journey with modern software that are available immediately and today together with the new touchpoint. Also available is our connected service model that I alluded to earlier that is already available wherever you can enjoy the services from Diebold Nixdorf today. Very important, and the reason why we are so confident in the immediate value and benefits of DN series for your own networks is that we have been able to leverage our client base to prove the solution already with many FIs piloting the solution in their network. Allow me to walk you through a few examples of customers where I was blessed to collaborate with to bring DN series to life. First example is BNL, part of BNP Paribas Group. BNL is a SOC leader in branch banking with very advanced branch setups that they have been deploying over the year. Their approach to consumer is extremely innovation-centric, and consumer experience and NPS is at the heart of their approach. With DN Series, we provide a more modern experience to the customer, much more integrated in digital channel. We offer cash dispense, cash deposit, and check deposit in half of the footprint of their previous generation self-service, and this is extremely critical for them as they move to smaller branch format, tailorless, that they are deploying in the community throughout Italy. In France, Crédit Mutuel blessed us with a collaboration around DN Series. Crédit Mutuel CIC Group is a very advanced and innovation-centric institution. With DN Series, we enable them to drive this new generation of experience, including contactless cash withdrawal. With DN Series, we enable them to move also to a much more simpler deployment model. With 2 models of the DN Series, we are now able to replace 6 models of the previous generation, making them much more easy to deploy the self-service strategy across their diverse branch ecosystem. Moving to Eastern Europe with Santander in Poland. Santander is deploying its brand across Poland through the innovation. They are really focused on customer journey and efficiency. With the DN Series, they are able to deploy a new UI that is very fit to their digital expansion. And the new cash capacity of DN Series will allow them to bring their cash recycler functionality to the next level and to really provide new heights in our relationship with Santander, not only in Poland, but globally. BBVA is probably one of the most progressive projects we were able to drive with DN Series, and a real proof point of what Scott and alluded to. With BBVA and the 200H, we are able not only to cater to their digital transition, and this configuration we deploy with BBVA is only delivering transactions through NFC and contactless, whether you are using your card or your mobile. Additionally, we decided to go for a paperless option, moving all the receipt into alternative electronic receipt. Additionally, with BBVA, we ambition to deliver a sustainable banking deployment. The machine here enjoy a lower power consumption. We are saving paper by moving entirely to the e-receipt option, and the cash recycling and the capacity of the cash recycler on DN Series allow the bank to save and reduce CO2 emission by minimizing the number of CIT trips. CSOB, which is a prominent commercial bank in Czech Republic, that is delivering its service through 280 branches, but also 3,300 post locations. CSOB is a very innovative bank and a long-lasting partner for Diebold Nixdorf. We are delivering with DN Series a new NFC-based transaction set. We are also increasing the efficiency of their recycling estate by improving capacity and further reducing CIT trip. Also, CSOB was very much sensitive to increasing attacks against their ATM network. They are seeing a surge of attempts around skimming and digital threat. With a new option we have in securities with DN Series, we are providing them with a much more trustworthy platform for their consumer base. In summary, we are pleased to introduce DN Series to the marketplace. This is the most ambitious solution set we have brought to market ever. DN Series is a result of deep discovery of consumer needs, but also tight collaboration with our customer globally. We are coupling here our excellence in technology with a deep service and software-oriented approach. This is a solution that is connected, communicative, and we see here an unparalleled opportunity to deliver self-service banking to new heights in our global client base. With that, Scott, I would like to hand over to you.
Thanks so much, Jerome. As you can hear, Diebold Nixdorf has really focused on the voice of our industry, your voice and your consumer's voice to bring the Diebold new line DN Series to life. we've reorganized our thinking and our offerings to be more solution-centric, really built to connect to people, to businesses, and to the digital ecosystem, and also built for more to solve the business challenges and bring more business value to every interaction. I would like to take a moment and apologize to all of our listeners and viewers out there for some of the technical challenges we experienced today. I would also reiterate that the slide deck will be made available to you after the webinar. We'll likely distribute that tomorrow, so although some of these slide transitions seem choppy, you'll be able to follow through with that more clearly when the slides are released to you. At this time, we're going to issue a poll. We'd like you to take a couple of moments and answer that poll if you would. These results are not going to be shared here, but we will pass on any requests that you do submit here for follow-up on the conclusion of the webinar. So please take a moment to respond. And as a reminder, this presentation and a link to the replay will also be mailed to you tomorrow, as I stated, so do watch your inbox for that. At this time, I think we can move on to some questions. We have a few minutes remaining in our hour here. And if you do have any questions, again, please feel free to use the Q&A feature at the bottom of your webinar screen. I do see a few of them that have also come in through the chat room as well. So we'll take a look at some of the questions. Jerome, one of the questions that has come in, can you share the maximum quantity of notes on each of the modules? Can you respond to that?
Sure. So, I mean, we have various options in our technology, but I would say each of our cache module can host, and specifically on the recycler, way above 12,000 banknotes in each. It varies from option to option, but I would say that's the average capacity that we are delivering with our new cache recycling technology.
Great. Thanks so much, Jerome. Appreciate that. Another question that's come in, can we give a high-level overview of the physical protection deployed to secure the CPU and peripherals? Maybe Thomas, you can give an answer to that one.
Sure. So if we look at the DN series, well, we have improved the security across the board, and that also includes the security of being able to access the area where the CPU and some of the peripherals are located, which is in the top head of the ATM. So the whole consumer interface has been improved in tamper-proofness. The shutters have been improved. But more important, though, is that all the devices are connected with trusted device communication and hence are not only physically secured, but also logically secured. That means when a device is unplugged from the USB port and for example, a malicious hard drive is trying to be connected, this will simply not work because only registered devices who are known to the ATM will be able to connect.
Great, thank you. Jerome, another question that I'm going to direct to you. Can you give a very high level, I mean, we could be here all day, the differences in the DN series at a macro level compared to what some of the other vendors are offering in the marketplace?
Yeah, I mean, thank you, Scott. I think you want to extend this session by an hour, right? But no, I mean, joke aside, just to, maybe if we want to frame that the right way, besides the very differentiating customer experience that we are delivering, because we are really aiming at delivering a totally new experience with a look and feel and a design that is both intuitive and ultra-modern and ultra-relevant to the digital-oriented population. I would like to say we are delivering now the largest number of transactions in the smallest footprint in the industry. That's extremely critical to our approach. The second is we want to provide customer with flexibility. So you will see with DN series, all the models are capable to evolve from a cash dispensing situation to a full function and to a recycling without the need to replace the system, making the machine extremely versatile with a lot of upgrade over the air opportunity. We also aim, and I was explaining that a bit with the BBV example in Spain, to deliver options to have digital-centric configuration where you can evolve from a traditional card reader and receipt to an e-receipt and fully contactless option. So the flexibility is extremely critical, and the ability to evolve the self-service as consumer demand evolve is extremely important. And obviously, as you know, Dibonics has a long tradition of technology excellence. And I'm proud to say that we own the IP on all the critical devices of the N series, and that's really a big differentiation in the marketplace in terms of our ability to drive new service model, but also deliver unmatched reliability in the marketplace.
Great. Thanks, Jerome, for that. Another question that has come in on the chat line, and I can address this, some best ways to move today from the ATM software platform to an API and microservices environment. From a software perspective, the Diebold Nixdorf approach is really opening up the ATM and being less client-centric and more what I'd call middleware-centric, where we certainly have capabilities that can stand at the ATM and drive transactions in the traditional sense. But we're really looking at opening up the environment to say it's not just about those legacy NDC and 912 protocols. It's about leveraging other capabilities within your own infrastructure, or perhaps even infrastructure of partners and other service providers out there. And the transaction middleware, our transaction engine through our Vynamic portfolio, is actually enabling that today. And Diebold Nixdorf, the DN series platform, will take good advantage of that. I think we heard Thomas speak earlier about some FIs who are out there and they're driving 40 different transactions. If you about it, most of those transactions are not actually going through the tool. And if we look at an API-driven economy and an API model with an app-based service, leveraging some of those capabilities within your own FI infrastructure and reusing some of those transactions that exist in other channels, those are the ways that we're seeing the DN series actually leveraging that. And to further the concept of this self-service device can actually be a proxy for the branch in many cases. Some other questions that have come in, a handset isn't shown on the DN series unit. What's the plan to add a handset? Jerome, do you want to tackle that one?
I'm happy to do so. I mean, the approach we took for DN series from a customer convenience is to have integrated microphone into the design, so we can deliver two-way video and two-way audio with DN series. We decided for particularly customer acceptance to go with either integrated microphone into the design or to allow customers to use their own device. I mean, the handset is in demand in some markets. However, we know that the customer acceptance for public handset is going a bit lower, so we decided to go with directional microphone integrated in the machine and alternatively a bring your own device situation. But we definitely offer audio option on all our systems.
Perfect, thank you so much. I think I had already addressed how we leverage the middleware capabilities as far as tapping into APIs and differentiate ourselves by saying we're opening up the channel. This isn't just your traditional cash and dash type of environment anymore. With the DN series and the solutions that we're bringing to market and offering more capabilities, that more integrated ability to go out and make calls into other environments is really actually going to help open up those transaction capabilities and leverage more of a middleware type environment. So hopefully that answered that question, Pauline. If you do have further details that you'd like to ask, certainly we can work with your account team to set up a more robust conversation with you. But to that end, maybe Thomas, I know we talked a little bit about some examples in Brazil, some innovative transactions that you're seeing on ATMs in other geographies. You know, what are sort of the top 3, top 4 that you're seeing out in the marketplace that are really game changers?
I would say a lot of it relates to the interaction with the customer smartphones. So how good are we connecting? And that brings us back to this seamless journey. And I mean, one I wouldn't say a common topic, but one very prominent topic that we see is the topic of pre-staging transactions and using the ATM as the fulfillment device. That means pre-staging a withdrawal, and then when you are on your way, and then once you hit the ATM, just tap your cell phone and your withdrawal is executed. That is something that is relatively simple, a simple way to integrate and extend the transaction capabilities of the ATM. If you think further, I mean, there is actually no limit, right? So, and it then depends also on, do you want to stay within your boundaries? Do you want to go outside? Thinking about integrating fintechs and external partners, yeah, I talked about the example of getting insurance quotes and closing insurance contracts at the ATM. So it is hard to say which are the four most popular. I would say that the boundaries are so much extended by the integration of intelligent integration into the delivery channels that there are infinite possibilities.
Perfect, thank you. Jerome, I think we did touch a little bit about this in some of the slides, but perhaps you can talk a lot around some of the skimming capabilities that we're seeing within the DN series.
Yes, and that's actually a long topic, but to cut it short, I mean, the approach was really to deliver and exceed whatever is available in the industry today, whether it be delivered off the shelf by the ATM manufacturer or a combination of native option and some of the things third party are able to deploy. I mean, in our higher hand, we are capable to provide prevention and detection for all the time of skimmer, whether they are M2 or M3 skimmer, but we have also encryptions option for all the max stripe and chip read head in our reader in order to deter eavesdropping. So that's a very long subject, but I would say that, I mean, with our higher security option, we are really able to defeat all the known fraud and to have a very robust forward-looking platform here to deter skimming. That's very awesome. And obviously, as I responded in the chat box, the active age remains available across the DN series except the 100D.
Perfect. Thanks, Jerome. Thomas, the next one, if we can talk a little around capacity and check deposits, that would be great.
Sure. Yeah. Looking at check deposits, so we have a check deposit module integrated there that can capture 30 checks in a bundle and deposits 700 checks in the bin. If we look at the cash capacity capabilities, the cash in and cash out tray is capable of handling bundles up to 300 notes, and the capacity of each cash container in the device, it depends on which ones we use, ranges from about 2,400 to 4,000 notes. And what is important to say, and Jerome mentioned that earlier, all the key technology components, which includes the cash recycler as well as the check deposit module, are 100% Diebold Nixdorf IP and our own technology.
Perfect, thank you. One question that has come in too, and I know we have some really good pride in this. Does the DN series use the Hitachi ECRM recycler in the modules? I will definitively say no, this is Diebold Nixdorf's proprietary technology, but perhaps Jerome, you can talk a little more in detail about that.
Yes, absolutely. I mean, as I mentioned earlier, I mean, it was very critical for us when we think about the critical cash technology, and as we see an evolving landscape around banknote security, to make sure we own the technology. I mean, this helps us really to deliver this superior reliability, but also to have a strong capability in terms of banknote recognition algorithm. We see that to be really one of the critical topics for the industry moving forward, and it was very critical for us to have a tight hand and control of notes handling and notes recognition. So that's really the way we approach this. We are very confident we are delivering best-in-class recognition engine and unmatched reliability, and this was only achievable by owning our own technology.
Great, thanks, Jerome. I'm going to point one more at you, and this is specific to the African marketplace. Do we have plans in what we're doing within the African context to help break into that market really well with the DN series?
Yeah, I mean, as highlighted in some of our earnings release, we are seeing very good traction for our African markets. And though, I mean, none of the customers here were quoted in our early adopter slide, we do have customers currently integrating and about to pilot the DN series. So, I mean, Africa is a big market for us. It's a very critical one. I think you will see us very soon being able to share with you some actual live pilots in Africa. And we are definitely committed to the market and are preparing a DN series. And DN series is fully thought through in order to meet, the growing demand for self-service in Africa. So we are working on that. We will have some machine live very soon in that marketplace, and we look forward to engage with you to bring DN series in your own environment.
Perfect. Thanks, Jerome. Thomas, a question came in around recycling in the U.S., and I know you had mentioned that this is still early days for the North American space, but can you comment on any recycling deployment in the U.S. to date?
Yeah, for sure. So it is for Diebold Nixdorf, I can say yes, we have recycling customers in the US, but it is on a relatively small scale at this point in time. But we see that the market is, as I mentioned earlier, is getting ready for it. So we are seeing really that cash deposits are decreasing, and check deposits are going down. So we are nearing the sweet spot where recycling makes sense. And we did a benchmark analysis, and we found out that about 30% of the ATMs deployed in the US from their cash flow will be very good candidates for recycling. And also looking often, the note quality is criticized in the US with the US dollar quality. We also analyzed that, and in fact 9 of 10 notes that are deposited at an ATM will be fit for recycling, just as to give you some 2 parameters why we believe that the market really is ready for cash recycling in the US now.
Perfect, thank you. We really have run out of time, but I have to say I'm so enthusiastically impressed with the number of questions that have come in here. If we haven't answered your question real time today or via a typed answer to you, rest assured we will come back to you with a response. So I do apologize that we have run out of time for that, but this does complete the time allotted for this webinar. What you'll see on the next screen here, as soon as I can open it up, is some resources that you can leverage to explore the Diebold Nixdorf, or the DN series, excuse me, on your own. I would like to express my sincere thanks to Thomas and Jerome for presenting today's session and allowing me to moderate. And thanks to everyone on the line for investing your time to share with us and hear from us on the DN series and thinking outside of the ATM box.